My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. I'm just trying to make you a little money. My job is not just to entertain, it's to explain, to teach. Call me 1-800-743-CNBC. Tweet me at Jim Cramer. Happy birthday to the bull! Almost 2 years ago, this market gave birth to one of the most quiet, gentle bulls. It was a baby boy that quickly turned out to be a real rip snorter.
House of pleasure.
After a day where the Dow dipped 58 points, S&P declined 0.21%, NASDAQ edged down 0.05%, I think it's worth celebrating the bull market's 2-year anniversary because it's starting quite unspectacular. Really, just not much at all. Fed was still raising rates. No one cared. In fact, the whole first year of this bull's life was an anomaly. That's because the Fed was furiously tightening, and the market went up anyway. It was supposed to be like this. It was that. Every night I say there's always a bull market somewhere, and for the last 2 years, well, it's been right in front of you. So in honor of this glorious birth of this fabulous stampeder, let's take a look at which stocks led us to this bonanza of a birthday. First, do you even have to guess, given this lid and mug, the best performer? Why, it's Nvidia, the incredible technology enterprise. It's arguably the most important company in the world right now. This may be, by the way, the most valuable hat in the world because this is signed by Jensen right there. GE Force, 25 years, rings the NASDAQ opening bell tomorrow. 2 years ago, Nvidia was at split-adjusted price of 11 smackers. And people were just beginning to realize that maybe it wasn't just a gaming company with some real fast graphics chips. This was just a month and a half before the launch of ChatGPT. The most exciting thing I can recall since you've got mail. By that point, I named my dog Nvidia. That happened years before this bull market, but not everyone watches Mad Money or belongs to CNBC Investing Club, so you might have missed it. Eventually, Nvidia and its Renaissance man CEO, Jensen, pioneered both accelerated computing and generative AI. We speak too much about the latter, not enough about the former. Accelerated computing is what makes things really work here. In other words, Nvidia's created machines that think faster than you do, and soon will do almost anything better than you can do. Now, I don't want you freaking out. We're in charge here. We make the decisions, but AI saves a lot of time. I call it a lot of man hours, which is why it's such a revolutionary technology for the enterprise. And it's about to get even better because we'll see an amazing jump in the on-the-fly thinking from generative AI when NVIDIA's new line of Blackwell chips gets fully deployed next year. They are so powerful, so fast. These guys basically invented a chip that is so quick that it created the entire AI business out of thin air. It wasn't possible before, but now it can do incredible things, and very soon it'll be both faster and better. By the way, I think it's going to do some stuff with video that's going to blow you away. I've never seen a company have such demand for its products, including demand from Tesla, which needs NVIDIA for self-driving cars, which we'll talk about. I'm sure you'll hear about tonight with the robot presentation for Tesla. The whole thing's remarkable, and the stock's 1,072% gain over the past 2 years was right there for the taking, as CNBC Investing Club members well know. I do think it's got more upside, which is why I always say own it, don't trade it. It does put a smile on my face. I am happy when people make a lot of money. It's just me. I will always be that way. Second best performer, Supermicro Computer. This is a company that makes hardware that goes hand in hand with NVIDIA, hence its incredible 786% run. Lately, though, Supermicro stalled. It had a weak second quarter. I've always thought that when you have a primary idea like NVIDIA and a secondary idea like Supermicro, you don't need the latter. Third is a company we've been talking increasingly about this year. It's called Vistra. And this one's about the data center, too. Vistra is one of the largest independent power producers, nuclear capacity, which means reliable carbon-free energy. Data centers are voracious consumers of energy, and the companies that use them can't get enough of it. So Vistra's managed to strike AL gold. Now, I personally think the stock's a little overdone, given its 479% move. But the next time it has one of its monster pullbacks, which do occur, I would do some buying. Okay, the next one may be the craziest stock of the year. It's called Palantir. It's a defense contractor, AI kicker. It's been a very good company. But more important, it's been a spectacular stock.
That was easy.
In a year when the defense stocks and the AI stocks have been incredibly strong, this one has both, with a heavy emphasis on government contracts. Palantir's become a cult stock at this point, though. You need to know that. Individual investors you can't seem to stay away from it. They buy it morning, noon, and night. Right after the bell, the closing bell, there's this big burst of buying that makes the stock look even better than it went out in regular trading. The stock's real expensive. but it's going to stay expensive because Palantir software is apparently beloved by the Pentagon as well as its rabid fans. Would I buy it up 439% in the last 2 years? No, but I definitely wouldn't short it. We've talked about the fifth biggest winner. It's called Fair Isaac before. In fact, we had the CEO, William Lansing, really impressive fellow on the show a couple times this year. This one does credit score. You probably know it as FICO. And it's by far the best of what it does. The FICO score is universally used, and no competitor comes close to its predictive power. I think Fair Isaac could be bought tomorrow morning, even with the stock up 390% in the past few years. And that is how great the company is. Full endorsement. 6, when this bull market was born, General Electric was still one company. Now it's 3 companies. GE Aerospace, GE Healthcare, GE Vernova. I like them all. With Boeing and Airbus having huge production problems, airplanes need to last longer. So GE's aerospace engine service business is on fire. GE Healthcare, which we own for the Travel Trust, is a laggard that makes MRI machines and other big-ticket medical devices. Now, it is just starting to get its sea legs after COVID knocked it back, Chinese orders slowed, and high financing costs has dragged it down. You need to borrow money. These things are so expensive in order to buy these. But all of those negatives are indeed dissipating, so the stock can work its way higher. GE Vernova was supposed to be the laggard because it represented GE's long-suffering power business. But with power generation suddenly in incredible demand, thanks to, yes, the data center, Vernova's natural gas turbines are flying off the proverbial shelves. Wind's not bad either, as long as it's onshore. And one day, nuclear plants will be built in great number. They know how to build small form-factor nukes. That's all Vernova. 7th, Meta Platforms. How can you have, honestly, how can you have a bull birthday party without inviting Meta, without inviting Mark Zuckerberg? I would never think of it. His last conference call told you a tale that made it sound like all ad campaigns will soon start on Instagram and Reels. Am I going to doubt this fella? No. He has the AI to design the most effective targeted ads, and you don't need to hire an advertising agency. Much better return on investment now. We did trim our position in Meta for the Travel Trust recently, small, but only because we had been so greedy and hadn't taken any profit. And we really let it run, and I was starting to feel like the bull makes money, bear make money, but hogs, we're planning to husband the rest. 8th, Broadcom makes data center plumbing, but also has a broadband infrastructure business, including cell phones. Now, we had CEO Hock Tan on when he went to San Francisco. He told an incredible story. I was so excited. I was jazzed about it. But nobody listened. Well, now they'll listen. Stock just hit an all-time high today. It's not done. I'd hold on to it, especially since its VMware division helps data centers cut hardware costs and operate much more efficiently, and it has really turned the corner. I like that stock very much. 9th, the cruise lines are as loved now as they were hated during COVID. And the best performer of the group, as I say almost every night, because you get a lot of questions about these, is Royal Caribbean, RCL. Cruises are a tremendous bargain, while hotel rooms rates and other forms of entertainment have just gotten to be too expensive. By the way, airline tickets, wow. There's not a lot of new capacity coming on in the fleet business. There's not a lot, but they take forever to build these ships, forever. Bookings are explosive. You can still buy the stock. And then finally, there's one I just have such a soft spot for. It's such a good company. It's called Arista Networks. It is probably the most unsung of all these winners because it's a dominant player when it comes to network infrastructure for the cloud, but nobody ever sees it. Yeah, it's got a lot of business with the data center. I know this is tiresome, but it works. Arista hit an all-time high today. I think it's got more room to run because this is the dominant player in all sorts of switches, adapters, and networking services that people don't really care about, but are making you a lot of money. So, oh yeah, this is signed too. You think I'm going to get away with just a hat? So, happy birthday, dear bull. The themes that have brought you here are still very much alive, but the bottom line, if you're going to buy these stocks, I go first with Nvidia, then with Broadcom, and finally Fair Isaac. If only because we need something that's not connected to the data center, even as we know it will remain a strong story for the ages. Let's take some calls. Why don't we start with Joe in North Carolina? Joe!
Hey, Jim. Hey, listen, I just want to give a special shout-out of thanks to all the volunteers, organizations, small and large, who are helping out in Western North Carolina and throughout
oh, boy,
the Southeast.
You're right. We need them. I don't want to favor any particular charity. I gave to Red Cross because I just like them so much, but everyone should reach in. Reach in your pockets. This is the right time to do it. These people need help. How can I help you?
All right, Jim. Hey, I purchased IBM many years ago for their dividend, but after it purchased Red Hat, they significantly energized their growth. My specific question is, with the quantum data centers in the U.S. and Germany and their AI order book growing, should this continue to be a long-term hold after rising 62% and achieving a new high yesterday?
Okay, it yields about 3. Let's say I wanted to buy 100 shares of IBM over the course of the next year. I would buy 25, and then let it come back down because it's had pretty much of a parabolic move. But I would be a buyer of this stock. I think that Arvin Christian's doing a remarkable job, really fabulous job, and got to hand it to him. Let's go to Sharon in Minnesota. Sharon.
Hey, Jim, how are you today?
I am good, Sharon. Beautiful day in New York. Happy to be around. What's happening?
Yeah, it's beautiful here, too, in Minnesota. So my question is, it seems like it's unclear which way the rates are going to go. What do you think about a firm in terms of whether it's a buy here?
Sure. I got to tell you, this is a great question because a lot of people feel it's related to rates. I think it's related to honest ability to be able to judge people's credit, give them credit, and then watch and see how well they do. Buy now, pay later. Max Legend. I have Max on. I truly enjoy Max. I get along with him. I have to admit, I've done some charitable stuff. It is in his orientation, and all I can tell you is that I think he's good to go. I like the stock very much. Let's go to Patrick in Tennessee, please. Patrick.
Hey, booyah, Mr. Jim. I was a long-time listener, and I'm a first-time caller.
Fair enough. How can I help you?
Now, I've always thought of Spotify as the Netflix of music streaming, and I've been running a long time with it. My question is it time to cut it down, or is that a money train I hear coming around the bend?
Let me tell you something about this. So I was up 5 today, and this is how I think, Patrick. I turned to Jeff, and I was going to say, Jeff, why didn't we buy it for the trust? But I say, why didn't we buy it for the trust to so many stocks? But you know what? Why didn't we buy it for the trust? All right, we have to take a moment and say happy birthday to this bull market. And if you're going to buy the stocks here, well, you know what? I like Nvidia first, Broadcom second, and then Fair Isaac. But you know what? There's no slouches on that list on Mad Money tonight. After doubling over the past year, I'm seeing if Samsara could continue to cruise higher, symbol IoT. When I sit down with the company's top brass, then we're wrapping up our series on yield, earnings growth, and valuation, YEV, by revealing the final 2 ideas that fit our thesis. And you called me and you stumped me on a real cool one called Texas Pacific Land. And I've done the research, and now I'm ready to run with it. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.